I remember a couple of years ago watching a video by Trader Oracle as he talked about holding on to your winners, the benefits of trading the trend and hanging on. I want to talk about that in this video. So there's a few benefits to it. One of them is wealth preservation. It's much easier to hold on to a winner than it is to start a new one. Traders often say the hardest part is opening a position in the right direction. It's easy to get stopped out. Um, a part of the wealth preservation is you don't want to lose money. So a good thing to do is once your position is in the green sufficiently, I like to say 20 points in the green, I like to move my stop loss to break even, and then it's a no risk trade. And then as the trade progresses, you can move it up to capture some of those gains, but always leave 20 points or so of room for price to move around, price to breathe. We're going to look at some examples of this in just a moment, but another thing is to go big or go home. What does that mean? I mean, let the market show you when the trend is over. So you could have, if you're following those wealth preservation tips above, you shouldn't have many losses. So what that means is it could be a great day and you can have many home runs, 50, 100, 150 point gains for a single trade, or you could have none. If price moves in the direction that you expect it to, then you hang on for the big wins. If it doesn't, it turns around and stops you out at break even, then there's no loss. And I'm going to show you some examples of that from yesterday. The last thing, which I forgot to put on the screen here, is every time you open and close positions, there's trading fees involved. You want to minimize your fees, of course. So if you hang on and try to create big winners, you pay less in fees as opposed to doing a whole bunch of smaller trades. Let's look at the chart from yesterday. Okay, we're in TradingView. This is NQ with 1 minute candles. I'm using the nebula indicator. That gives us these great colors here on the bars and these signals. And I've also got the Bollinger Band. You can see the upper and lower Bollinger Bands. That blue line in the middle, that's the SMA 20. Let's open this up so you can see SMA 20. But I prefer that yellow line in the middle there. That's the EMA 21. You can see it right there. I'm also using Lux Algo Sessions. That's this rectangle that shows the low and high of the New York session and the start and end of the New York session, and that updates as the session proceeds throughout the day. Down here I've got the squeeze momentum oscillator, the Watts-Tar explosion oscillator, and the wave trend oscillator that help me make some decisions. So let's take a look. Let's zoom in a little bit more so we can see a little better. So I don't like to trade the opening because it's too choppy, and you can see there's some chop there, but actually very quickly it finds its feet and starts moving. So if I did trade, I like to trade the pullbacks to the EMA 21, that yellow line. So here we got some good buy volume, I like that, and then it pulls back to EMA 21, so I'd be getting in here. It pulled back even further and almost stopped us out before getting back above the EMA 21 and carrying on. And that's what we're looking for with this strategy, is staying above the EMA 21. So price jumps up about 20 points right about there. So you can easily have gotten 20 points there, but we don't, we're not just aiming for 20 points, we're aiming for something bigger. So we hang on, and then we get some more buy volume coming in, and it pops up, and we're at 75 points right there. And we could just close. We see these check marks from Nebula saying the trend might be over, but we've got a good gain here. So if price pulled back a bit, we're still way in the green. So that's what I like, because if we would have captured 20 points here and then tried to get back in, we could have pulled back more and stopped us out again. But instead, we just move our stop loss to break even, and if it pulled back and took us out at break even, and there's no loss, no harm done. So I like this strategy because now we're just questioning about how much profit we want. Where do we want to take profit? We're not worried about losing money, so we're preserving our wealth. We're just deciding how much money we want. So price is a good distance between the price here and the EMA 21. So we just hang on and it comes up. And now here we get some more signals that the trend might be over. We get this strong sell signal from Nebula. We get some color in the candles, some sell color. We can see that in the Wada-Atar exposure and all the oscillators here going down, going down. So it'd be good to get out, but it stayed above the EMA 21. So it's possible this could have just been a pullback and make a new high, but as we can see, it didn't. It made a lower high, and then good sell volume coming in here. So I'd be getting out as soon as it crossed the EMA 21 right there, because it looks like we got strong sell volume. So I would have made 75 points. Put a little note here so you can easily see. So far in the day, we're up 75 points. And then what? Well, I like this sell volume, and yeah, I'd be expecting we're going to come down and retrace some of this, maybe close this fair value gap here. So I would have went short, flipped the long to a short. And I left this as a 20-point rectangle here to see that when price came here above 20 points again, I would have moved my stop loss to break even. So then I'm hoping it's going to go on further, but instead, as it sometimes does, price jumped back up and would have taken me out at break even right there. So now what? Would I jump right into a long? No, I just got stopped out. I'm a little more careful. I'm worried about just riding along the EMA 21 here. So I got good buy volume, and I like that. But notice the next candle, the buy volume disappeared, and price just goes sideways for a while. So, so we made 75 points here, 0 here. We're still at 75 points. Now we get some sell volume coming. We're below the EMA 21, so I'm only looking for shorts. And good sell volume, but I want to get a pullback. So I don't want to buy the tip because it's too easy to get stopped out when price pulls back. And sure enough, it pulled back. And I didn't go all the way back to the EMA 21, but it pulled back about 20 points. So I like that. I'd be getting in right there. And I left the rectangle here so you can see 20 points when price goes below that. That's 20 points again. I'd move my stop loss to break even. So price pulled back to the EMA 21. I'm hoping it would carry on down, but it didn't. It hit my stop loss, and I have another 0-point trade. But we haven't lost any money, and that's the important thing. We're doing wealth preservation. So now what? So now we got break even stop, break even stop. I'm nervous about getting in. I want to see some volume. And we're just carrying along the EMA 21 here. We're above, we're below. But I like this. I like to see this buy volume. And now we're above, and we went sideways for a bit. We didn't go below the EMA 21. When I can see this more buy volume coming in, I want to get in. So that's what I did here. And price went above this rectangle here, this 20-point line. So I moved my stop loss to break even. Now in this case, I'm not going to get stopped out, but I can see by the nebula's red candles here that the sell volume's coming in. So I'd be getting out there with about a 5 points gain. So our 75, we had 75 points of gain before. I'd close with about 5 points of gain there. Worrying it's going to go down further. And sure enough, it did go down further. So I switched my long to a short here when I see this sell volume coming in. And for a while, it did nothing. Went sideways. So I was getting nervous. It might be going up. Maybe make a new high for the day. But no, it went down. I moved my stop loss to break even. And then we go sideways for a while. But I'm happy because our stop loss break even. It's a no risk trade. And then it switches here. So notice I see some good buy volume coming in. Our oscillators say things going up. So I would have closed that for about 20 points again. So now we're at 100 points so far in the day. And I would have switched this from a short to a long. And initially, price kept going up, but it didn't get above that 20 points. So I wouldn't have moved my stop loss to break even yet. And the price came crashing back down, hit my stop loss, and I would have lost 10 points. But we're still up 90 points in the day. Okay, what's next? Well, price goes sideways for a while. Notice it's going up and down, crossing the EMA 21. So I'm hesitant to get in. But here I see price go back up to the EMA 21 and not go above. It doesn't cross and it comes down again. So I'm interested in getting in right here. And I remember this one because it worked out really well for me. I went short and it looked like it comes back up to EMA 21. In fact, it goes a little bit above the EMA 21 there. And I was thinking about closing it, pulling the trigger and closing it. And then Trump got on the news and said he's going to cancel the trade negotiations with Canada. And the market didn't like that and fell down very sharp. And I could have got 50 points. Yeah, 50 points very easily there. But I want more. I want to strap in and hang on. That's what I did, because if I would have closed for 50 points here, that's fine, great, I love 50 points, I want to capture those gains. However, then I want to get back in, and it's hard to get back in. See, price looks like it's coming back up, so then do I want to get in? Well, I don't, because we're below the EMA 21, so I don't want to go short. So then how do I get back in? Do I wait for the price to get all the way up to EMA 21? Well, I'd like to, but then it's hard. Sometimes it doesn't go up, and I'll miss out. So in fact, it worked out good here. I could have got in, went short at the EMA 21 here, but I didn't know. But instead, if I left my short open instead of closing for 50 points, then price can dance around like that. I give it lots of room to breathe. I move my stop loss to break even, so it's no risk, and I just let it play out. What if it jumped up and hit my stop loss? Well, that'd be a shame because you lose 50 points, but it's not the end of the world. There's always another trade. So, but luckily in this case, it worked out. Price didn't really go above the EMA 21, almost here. I was getting worried about it there, but it stayed below and then kept going down. Moved back up to the EMA 21 here, and here, and here, and here. But each time it was making a lower high and a lower low and staying below the EMA 21, so I'm loving it. And then where do I get out? Well, I would have got out right here. Why here? Because I could have did even better. I got 140 points on this trade, and I could have did better. I could have got 170, 175 points on that trade. But what I was looking for is I saw price cross the EMA 21 here, and I see the buy volume coming in, the strong green color on those candles. Wadatar says we're going up. All the oscillators say we're going up. So this is where I'd be getting out. As opposed to here, we could have got lower, but this makes a good break above the EMA 21, and I'd be getting out right there for 140 points again. So then, what do? Well, I like this good buy volume. I'm looking to go long. We're above the EMA 21, so that's what I did. And often, when you see a news, move the market like this and drop down so much as a 175 point drop, often price recovers. It just takes some time for the news to get digested, and then often, not always, but often, price goes back up to a similar level to before the big move. And that's what it did here. So this is the end of the day, this rectangle. So I got in right here as price pulled back to the comma, and I got in, I wrote it till the end of the day. Price stayed above the EMA 21, and so I didn't just go for 50 points, because you could easily get 50 points on this right about there, but then I'd want to get in again. And I don't like to buy the tip, as I said, so I'd be looking to get in maybe here, and then you got to try to do the timing. But if it pulls back farther than you thought, maybe you get stopped out or you miss it. Instead, strap in, hang on, and see where it goes. And I closed right before the end of the day for 125 points. So add that to the 230 that we already had here. That's 355 points for the day. That's a fantastic day. And how many trades were we looking at? Let me zoom out a little bit here. So this was about 1, 2, 3, 4, 5, 6, 7, 8, 8 or 9 trades. And if I only tried to get a 20-point take profit on each of them, then say 8, 160, less than 200 points if everyone was a winner, and they weren't all winners, but these ones that were 0 points here, that could have been a 20-point win. There was only one where we lost 10 points. That would be a loser there. But nonetheless, the strategy of strapping in and hanging on ended up with much bigger wins for the day, 355 points, and fewer fees, because I didn't try to break this into a whole bunch of small trades. Instead, this was just 1 fee to open and a fee to close, and always minimizing my risk. And that worked out really good for yesterday, which is Friday, June 27th, 2025.